Welcome to Markets Now. I'm Michelle Rook with Bryan Doherty with Total Farm Marketing. It was a down day in livestock, but an up day in the grains. And in fact, a big update, Bryan, in the soybean market. January contract clearing some pretty strong resistance. So did the March contract. Was it South American weather? Was it export hopes? What drove this market?
That's a little bit of everything, but primarily weather. Talking about a very significant cold front potentially pushing into southern Brazil, where it's been too wet to begin with. So kind of compounding problems there. The north remains dry. So I clump it all into a less than ideal category. So when the calendar rolls around and we see these things in October, we want to make sure, and we kind of tell producers, don't get too far over your skis reading the South American stuff. It's kind of like late April, early May. It just doesn't have quite the bite. We can't quite draw conclusions or connect the dots that this is a smaller crop. But now that we're in November, it starts to have more impact because you've already got dry conditions existing or too wet, less than ideal conditions. Throw another weather event there, and then the push above some support or resistance on charts, uncovering sell stops, bean prices picking up well over 30 cents in the week, soybean meal into new highs. Argentina doesn't have the exportable meal. The world knows that. The U.S. kind of has a strong arm there, and we're seeing the trade buy meal, sell oil, popular speculative trade right now. So there's just a lot of things that are sort of moving into that. Behind all of this, too, is a pretty significant drop in the dollar this week.
Yeah, so with all that being said, and with the strong technical close, where do we project to now in beans?
Well, you can look at the charts, and I've always kind of joked a little bit when I do meetings or talk to farmers that we're growing adults and we're looking at lines on a piece of paper, right? But those lines have meaning and those formations. So I've got a nice inverted head and shoulders formation, and I don't want to get anybody too excited here, but it certainly points to about $14 on the March contract, and you can really extrapolate that to the January, March, May contracts. They all have a similar pattern, but that would be a really nice push higher and it'd get the market back up toward its highs. The USDA may have something to say on this here at the USDA report release on the 9th. But suffice it to say, 220 million bushels of carry out in the U.S. doesn't leave a lot of room for production issues anywhere else worldwide. And so if you have less than ideal conditions starting to develop into the Brazil window, the market's taking notice. I wouldn't fall in love with it yet because we're still in sort of this blasé environment. But between weather, the dollar, lack of strong farmer selling, end user buying, things are looking a little brighter in the soybean complex.
So corn followed soybeans. We bounced off of a 2-year low. How important was that, Bryan?
Technically, it's really important. You drop right back down to the low that we saw here several weeks back on the December corn, and that was based in mid-September off the USDA report. Put the low end, rallied up. It had a disappointing last couple of weeks here, but when you double bottom here, and it's not unusual to see the corn market maybe tail off into late October, November, historical studies, so there's about a 50% chance that happens. And when the market does tail off like that and double bottom, you get strength elsewhere. So we got it in beans, we got it some in wheat today, and you're starting to see the market maybe stabilize. But between the dollar, the technical double bottom, the higher bean market, want to be a little more confident that the corn market is trying to carve out a low here. The only thing holding that back right now is some private estimates that really kind of point toward a revision of upward yield for this year's crop, and based on just our own talks with farmers, I would say 6 out of 10 probably have a better than expected corn crop than they thought going into harvest. 2 out of 10 maybe as expected, maybe 3 out of 10 as expected, and then 1 out of 10 worse. But it's not this theme of, boy, this yield is really terrible, Michelle. The theme is, we don't know where it came from, but it's welcomed, and there's some overrun there. And that's partly, I think, what pressured corn market here the last couple of weeks is just the realization that the crop, if it had to tilt one way or the other, tilting a little better than expected.
Yeah, I certainly heard that in my reports with farmers. What about the wheat market today, Bryan? Did it just follow corn and soybeans, or was that a function of that sharply lower dollar too?
The dollar, when the dollar drops like it has here in the last couple of sessions, that's certainly going to be supportive for wheat. So I think wheat found its support on the dollar, uh, and traders may have been trying to start to buy wheat. Maybe they bought wheat, sold corn today on some spreading, or this week I should say, and then today just it was across the board into the wheat complex. We'll expect that the winter wheat crop ratings will stay on the good side. Yet, from a worldwide perspective, it looks like, from our view, that the world has sort of peaked its wheat production. We'll continue to look at drawdown in Australia. Russia says they've got X amount of wheat, but there's big discrepancy between 92 or 93 million and the USDA's 85 million. So it looks like the wheat's trying to carve a low as well, but there just isn't any catalyst in the wheat market right now to really bolster that. It'll have to ride on the heels of soybeans, or if corn recovers. Right now, it does not look like the leader.
Yeah, you had to wonder today if soybeans kind of led corn, and if they wouldn't have, if we would have ended up, taking out that September low. So my question is can we build on any of this momentum next week, or is it all about what soybeans do?
I think it's more about what soybeans do. Unfortunately, corn is kind of on this island. While harvest is still progressing, there's enough harvest that any overrun that farmers don't want to store, they're trying to figure out what to do with. In general, the problem, one of the problems, we're expecting much of a rally in corn. Not saying corn can't rebound, but we saw this a few weeks back where it begins to rebound. So in a year like this, it's been an odd year. We went into the beginning of the new year with high prices, and in particular for old crop and strong basis levels. Consequently, farmers really did a nice job of selling that, but because of the big inversion, there wasn't a big incentive or really a want to sell new crop corn, despite it being a good price. They just saw great prices. So given that, and then given the run up in June, sure, we saw December corn hit 630, but what farmer wasn't looking out his back window wondering if he's going to get any rain?
Yeah.
So anyway, my point is that farmers have probably more on price corn now than they've had in some time, maybe ever. And that usually is not something that's bullish. That means when the market rallies up, there's an army of farmers out there. Part of that army starts to sell corn just because they need cash flow, bin space, core bins, all of those things. So unfortunately, it's going to have to come from weather in South America or something that I don't see to really get some demand drivers or some sort of really strong short covering, or get that fund money from net short to net long. Something has to perceptively come into play.
Yeah, we need a catalyst for sure. Cattle market, down day here today, but we had a very strong close yesterday, filled the chart gap, closed above it, did not see follow through today, even though we had some better cash. So was that profit taking or hedge pressure?
Well, good question. So the market, it's been kind of an odd month here because we had this cattle on feed report and gap lower. The market sold off and the world was coming to an end. Then it rallied back, made a sharp up day yesterday, then give some of that back today. So I'm going to stick with my guns that the bigger picture is still ultimately supply driven. This month's October's cattle on feed report, really reflective of some numbers that caught the market by surprise. But remember, on feed and placements, depending on end of the month, weather, producers' time to move cattle, harvest, all of these things have something to come into play. So I'm going to look at the sort of the negative tone in that month is really more something that was reflective of just circumstance and not a bigger trend change, let's say, in the supply of cattle. Where my bigger concern may rise, and has, and I've talked about this for months, is just can the consumer keep up with it? And that to me seems to be something where I'm very trepid and cautious. But from the supply standpoint, it's hard not to be friendly cattle into the middle of the winter months. We see corrections along the way. They're high priced for sure. Utilize put options for sure, but don't give up on the market really, stretching itself into December, January. We're just entering into a weather time period where there's going to be some challenges in feedlots in November, December, January, and in particular, probably in November when you go from freeze, thaw, and snow and non-snow and muddy conditions.
Yeah. And the hog market also set back, and we've had over a 50% retracement. So was that just some profit taking there, or is that market just kind of run out of gas?
That was profit taking. I think that was the market running out of gas. That the vision is just still too much pork supply, too many hogs. That market didn't trim itself down on the supply side. The producers kept moving forward, and that is to me a little bit symptomatic of what happens when you have such concentrated production. That who's going to blink and who's going to produce less to begin with, or do you just keep going full steam ahead and hope to outproduce the next guy down the road? And so the supply side is an issue there. Now, can the consumers move out of beef into pork? It doesn't seem like they have a real strong appetite for it, at least to alleviate the supply of pork. So I'd probably anticipate that hog futures and pork prices remain somewhat sluggish, but the futures are going to remain volatile. The trade likes to buy these cheap hog price dips and run up, but we don't have an environment right now where it looks like we can sustain a bull rally in the hogs unless we really get some kind of evidence on hogs and pigs report that this herd is being trimmed back significantly, or exports are picking up. We're a little bit worried about, again, considering world economic conditions, inflation, all of those things don't bode well for excess exports.
Yeah. Well, thanks for joining us. Bryan Doherty with Total Farm Marketing. That's Markets Now.